Hey, I want to do a video on the power of dollar cost averaging and why I recommend it as a strategy that anyone can use to invest long term. Now, this isn't financial advice. I'm just showing you this calculator and this is real data. This is real data and this is what would have happened. And I'm going to explain, although the lump sum investment sees better returns in each of these examples, and explain why the dollar cost averaging is more sensible and more suited to 99% of people, or 90% of people. Okay, so this is from the start of 2019 till today. If you bought $50 Australian worth of Bitcoin each week, you would have invested $8,000 and you would currently have $28,000 worth of Bitcoin. You'd have half a Bitcoin. Now, if you'd invested 8,100 on the 1st of the 1st, 2019, you'd have 1.56 Bitcoin worth $84,000. Now, obviously, that's triple, right? Seems a lot better. And if you time the market and you know exactly what you're doing, you have rules in place, you're experienced, etc., this can work. Lump sum can work. I'm not saying it can't, but for 90 to 99% of people, dollar cost averaging is the best. Is best, and the reasons are most people don't have lump sums like that to invest, right? And if you did, just say you saved up $10,000, you invested it. Even if you invested it at the exact same time here, you would have seen it run up to 60,000 and then halve again. You would have watched your lump sum halve. You watch it run up again and then halve again. Your emotional attachment to that lump sum is massive. You won't be able to sleep at night. You'll be a bad person. You'll get road rage. You will start swearing more often. You will just not be a very good mate, more than likely, because you will see it as, in this. So it would be currently $84,000 you would have. In April last year, you would have had $170,000 worth. Just in December last year, you would have $170,000 worth. So last year, from May to September to July, you would have essentially lost $80,000, and then you would have gained $80,000 between then and the end of the year, and then you would have lost $80,000 again. Like that, putting the lump sum in makes you a lot more emotionally connected to the investment, and especially if it's all you've saved up. If that's 5 or 10% of your savings, then maybe you'd be less emotionally connected to it. Now, the downsides of being emotionally connected, like I said, you become a terrible person. You don't enjoy yourself. But the likelihood of you selling is very high. Likelihood that you sell at the top even is very low. Like in this scenario, the price would have come up, you would have had $170,000 worth. It would have dropped down to here being worth 84. You probably would have sold the majority of it, and then it would have just went straight back up again. It's to lump sum invest, you need to have rules in place for when you buy. You need strategies, and you need to be prepared and strapped in for the emotional roller coaster ride. Now, I'm talking about investments here, and investments aren't short term. Investments need to be 3, 4, 5 to 10-year outlooks. And the reason is the longer your outlook, the higher probability the odds will be the more chance the odds will be in your favor. It's very hard to predict things in the short term, but the long-term macro trends are very evident. Right. So dollar cost averaging, the reason it's so good is because you don't need to know anything. You can set up that $50 a week comes out of your account. You don't think about it. It buys Bitcoin. The only you don't need to look at the price. You don't care. The other good thing is when the price goes up, you're like, oh, you notice that I'm buying half as much Bitcoin with this $50 as I was a few months ago. This sucks. And then when the price comes down again, you're like, wow, I'm getting a lot more Bitcoin for my money. This is great. And you kind of welcome the dips. You're like, cool, cheap prices again. And maybe when the prices are cheap, you can double, triple, you can up your dollar cost average amount. You can say, hey, cool, I'm gonna, maybe I'm gonna put in quadruple or double for a few weeks here, um, and then yeah, maybe when the prices are high again, I'll stop for a sec. But that's even getting a bit too technical. Like you could just leave it the same, add, maybe put a bit more in when it's low. That's it. But the point is, you welcome lower prices, you enjoy seeing them, and that's the exact opposite of putting in a lump sum. And the points I made about the lump sum investment before were getting a very early low price of Bitcoin, getting a very good buy-in price, and then watching the price run up. So that's even best case scenario. You're seeing your worth fluctuate like crazy. Imagine if you bought the top. Imagine if you bought 60,000 here. You would have watched it halve, come back up again to what you bought it at, and halve again. Like that's an even more emotionally draining and confusing cycle. So yeah, even if you knew nothing, you bought at the same time every week, you'd be up $20,000. And if I looked at this chart in December last year, right, the ninth of December, or early December, this would be double because we've halved since then. You'd be $40,000 in profit. That's a minimum wage. That's a wage. That's an extra wage that you would have added on just in 3 years, right? So we are looking at this at a low. Remember that. We're looking at this, the price is just halved. So that's still very, very significant, and a bit of a foolproof method. Now, maybe just for fun, we'll make this 2016. Oops. Yeah, look at that. $50 a week since 2016. You would have invested 15,000, and you would have over $250,000 worth of Bitcoin. If you'd done the lump sum, you'd have 1.36 million. Pretty crazy. Maybe we'll take this back to 2019, so 3 years. We'll make this $100, and obviously just what we're looking at before would double. So $100 a week for 3 years, $16,000 turns into almost 60. Remember, November last year that would have been over 100. So your profit would have been $80,000 if we looked at this a few months ago. All right, now we'll go quickly look at Ethereum. It's the same principles, just showing you the power of it. So $50 a week for 3 years, 8.1 thousand invested. You'd have $73,000 worth, $65,000 in profit. Again, that would have been double. A few months ago, you would have had $120,000 worth from 8,000. It's pretty crazy. 1,000%. That would have been well over the 1,000%. So again, this isn't financial advice. I'm merely showing you the data, and explaining, I guess, even though dollar cost averaging is less profit each time, the benefits of it. So I'm pointing out the more sensible method for most people using historic data. And it's very interesting that the fact is still very much in profit, even though the prices are supposedly terrible right now, right? Cool. Well, I think that's enough info. You can look at this website yourself. Obviously, you can see what it's called there. Punch in your own data, and yeah, go from there.